And we're back. Homeowners insurance. So, whether you are a current homeowner or a future homeowner, you need to understand what the different characteristics of a homeowner's insurance policy. So, again, this policy provides you insurance in the event of property damage, theft, or personal liability to your home. It covers events from fire over to a burglary, and we'll talk about the different perils and the different amounts covered by the insurance policy. Okay, so I'll go through these. You can read these at your leisure. So I won't go through each of these in detail, but I'll speak about different ones. So when it comes to homeowners insurance policies, they have what they call different perils of protection. So if the first one, if it's a peril one, protect against fire, lightning, explosion, hail, riots, vehicles, aircraft, smoke, vandalism, theft, malicious mischief, and glass breakage. So if your policy says it's a Peril 1 or HO1, it's covering those type of items. If you have HO2, it covers those identified in 1, along with the weight of ice, snow, or sleet, collapse of a building, overflow of water or stream, power surges, the explosion of steam or hot water system, frozen plumbing, heating units, air conditioning system, and domestic appliances. So yes, you can have an HO1 and an HO2 for your policy. If it's an HO3, protect the home and any other structures on the property against all events except those that are specifically excluded by the policy. These events that are typically not covered are earthquakes, floods, termites, war, and nuclear accidents. Okay, so sometimes you're required to get flood insurance as a additional insurance, as a separate policy, or earthquake insurance. When I first bought my current home, my policy did not include earthquake insurance coverage. Therefore, I had to get an additional policy that covered earthquake that was required by the mortgage company that secured the loan on my home. Okay? Renters insurance. For all you renters, yes, you do need to have renters insurance. It protects your personal assets from events such as theft, fire, vandalism, and smoke. So if you're not a homeowner, you're a renter, you do need to have a renter insurance policy. If it's an HO5, protect the home, other structure of the property, and personal assets against all events except those that are excluded by the specific homeowner's policy. So the policy will indicate to you what items may be excluded. Okay? Maybe you have a condominium that's called HO6. You need to have condominium owners insurance. It protects your personal assets from events such as theft, fire, vandalism, and smoke. Okay? HO7 is for mobile homes and house trailers. And then HO8 protect the home from same events as HO1, except that it's based on repairs or cash values, not replacement costs. And we'll talk a bit more in detail about the difference between repairs on cash value compared to replacement costs. So make sure you understand the type of insurance policy from a homeowner's insurance 1 to the homeowner's insurance number 8. Okay? Property damage. So depending upon your policy, you may have a cash value policy or a replacement cost policy. So if you have a cash value policy, it pays you the value of the damaged property after considering depreciation. So if you have a cash value property, and let's say your appliances are or caught up in a fire, they will pay you the value of those items after determining the amount of depreciation on those items. Compared to a replacement cost policy, pays you for the actual cost of replacing the damaged property. So we're now saying if I have to renovate my kitchen because it caught on fire, I got to put in all new cabinets, new countertops, etc. If I have the replacement cost policy, it will pay you the actual cost of replacing the damaged property. Minimum limit, many insurers require at least 80% of replacement costs. So that's the minimum coverage you can have. Normally would be 80% of replacement costs. Your institution that is securing your mortgage may require enough insurance to cover your mortgage. So you may have to have enough insurance coverage through your homeowner's insurance policy to make sure that the cost of the mortgage is included as part of your insurance policy. Okay. Other structural property may also be covered, such as your personal property. So let's say you may have valuables such as watches, jewelry, other type of valuables. You can have protection on those items as part of your insurance coverage. So if you have anything of value that's in your home that's not on the original policy, you can pay an additional premium again to have your valuable items covered as part. So do home inventory to see if there's any items that you feel they're not on the original insurance policy that should be covered, then you can get a policy to have those items protected as well. Okay? Personal property replacement cost coverage is available. So again, if you have that particular coverage, say again, if you have a Rolex watch and it is stolen, if you have a policy on it, then you can receive funds to replace that actual item. Okay? So there's a personal property floater, an extension to a home policy that allows you to itemize your valuable. So you get a personal property floater that allows you to itemize the different valuables, personal up to yourself, and have them included as part of your home insurance policy premium. Okay. Liabilities included to cover any lawsuits resulting from an event occurring in your home or your property. So if someone comes to your home and they fall and slip or hurt themselves and they want to sue you, then your liability insurance as part of your homeowner policy is going to protect you for that. All type of provision, additional living expenses, loss of use provision. So in a situation where you lose the use of your home for some reason, you can also have coverage that will pay you to stay, say, at a hotel while your home is being repaired, things of that nature. So you can have other provisions as part of your homeowner's insurance policy as well. Okay? These are the factors that will affect the homeowner's insurance premium: the value of your insured home, the deductible, meaning the amount that you're going to pay in the case of something happens, the location of your home, the degree of protection that you want to offer for your home, as well as discount. So often when you bundle your auto insurance and your home insurance policy together with the same insurance company, they may provide you with a discount for bundling your different types of insurance coverage. This is just the cost of premiums in certain states. So depending upon where you live, and again, the value of your home, that's going to impact the annual premium you're going to pay for your insurance. Now, I will say in the state of Missouri, at one point, because we were having a lot of different situations with hail damage, any type of situation like that happens, that's going to cause an increase in the premium amount that's been charged by insurance company. Strategies to reduce your premium, the amount that you're paying to the insurance company: increase your deductible, which means that in a case something does happen, then you will pay a higher deductible, but you're paying a lesser premium each month. Improve protection. So when you do things like put an alarm system on your home, that's going to reduce the premium you pay the insurance company. Again, I mentioned use one insurance for all types of insurance. So if you bundle your life insurance, your property insurance, auto insurance, all with the same insurance company, that can save you money because you bundle those together. Stay with the same insurance company, Yes, if you're satisfied with them, but also shop around to make sure the rates they're charging you are equal to the rates being charged by other companies, or maybe there's another company that you can go to that will provide you with cheaper insurance coverage. There's a website called insurance.com that you can go to answer a lot of important questions pertaining to homeowners insurance coverage. Okay? Now, what happens if there's something going on with my home? I need to file a claim. Well, first, so maybe there was hail damage that took place. You want to contact the insurance company immediately if damage occurs. They're going to send out a claim adjuster who's going to estimate the damage. They'll look at your home inventory. They're going to get it to see the amount of damage. They're going to get an independent estimate to indicate what the costs are. Like, for example, I had hail damage to my house last year, so they had someone to come out, assess all the damage. They did an estimate, and then they came out to say, okay, we'll replace the roof and do these items, and we'll pay up to this dollar amount. Now, if they give you a very low estimate and you know the amount should be higher, you can appeal to the insurance company to say that no, that's not going to cover my damages. You all need to come up with a higher amount of the estimate. Okay? So here we have a sample of a homeowner's insurance policy. So this is the coverage for Stephanie for her dwelling. She has a policy up to $110,000. Personal property, $25,000. Personal liability, $100,000. Damage to the property of others, she's paying $500. Medical payments to others, $1,000. There's a discount for having a house alone. Annual premium is $600. Now, this is an academic illustration. I do want to caution you that you're not going to find many homes from a policy that only cost $600. You probably get at least $1,000 and higher. And again, it does depend upon the value of your home and the level of protection that you want to get. Now, again, renters, yes, if you're renting a house, a condo, or apartment, you do need to have renter's insurance, because the insurance policy of the homeowner does not cover your personal assets. So you want to get renter's insurance to cover your personal asset. Also covers liability damages to a person on your property. Renter's insurance, people, is very inexpensive. You can get a policy for at least about $20, but yes, every person that is renting needs to have renter's insurance coverage. Okay? Last we have what's called an umbrella personal liability policy. That's a supplement to an auto or a homeowner's insurance that provides additional coverage. So let's say that your homeowner's insurance doesn't provide you with adequate coverage. You can get an umbrella personal liability policy that will add additional coverage to your home or to your auto. So sometimes when people have luxury vehicles, the standard policy doesn't give them enough coverage, so they'll get an additional umbrella policy coverage to make sure their assets protected. Or if they have a very expensive home, then they'll get an additional personal liability policy to cover additional protection against the actual value of their home. Okay? So you want to ask yourself key decisions. Do you have adequate insurance to protect your wealth in terms of both your home and your automobile? How much insurance should you plan to have in the future? So again, it depends upon the level of protection you're looking for, but you want to make sure that you have adequate coverage to protect both your home as well as your auto. Okay? So again, auto protects one of your main assets being your automobile against liabilities, and homeowners protect, typically your home would be the largest asset against personal liabilities. So yes, it's important that you have both auto insurance coverage and homeowners, and make sure that you have the right amount of coverage. All right? So I hope you've enjoyed this information. Take heed to it, apply it to your personal life, and with that, I'll see you later. Bye-bye.